If the interest received under POSB account, if it crosses 3,500, then it is taxable. Interest on POSB account. So what is the interest on POSB account received? The POSB account is rupees 500. If you are computing the value to impose the tax, if any tax is already deducted, you have to add back it. That's it. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence. Dear students, welcome to this new session on unit number 3, that is income from other sources. So in the previous class, discussing about income from other sources, and we also solved a few problems based on the topic income from other sources. So in this session, we will be solving few more problems with respect to income from other sources. So moving on to the next problem, that is problem number 3. Following incomes are received by Mr. Ajay, resident, in the previous year 2019-20. Compute his taxable income from the head of other sources. So first point, director's fees, rupees 10,000. Next, interest from post office savings bank account, rupees 500. Yes, the first point, director fees, it comes under income from other sources and it is taxable. Second point, interest from post office savings bank account, rupees 500. Yes, income from post office savings bank account, it is taxable under the head of income from other sources. But we have some income limit. If that income limit crosses, then it is taxable. So what is that limit? 3,500. So the limit for POSB account is 3,500. If the interest received under POSB account, if it crosses 3,500, then it is taxable. If the received amount is lesser than 3,500, then it is not taxable, it is nil. So moving on to the third point, dividend received from cooperative society. Next, winning from Andhra Pradesh state lottery, rupees 28,000 net. So we have to make it as gross one. So how we will make it as gross? So 28,000 divided by 70 into 100. If you do these calculations, you will get 100% value. So why we have taken 70% here? We have taken 70% because the 30% tax is deducted. From 100%, 30% is deducted. What is the remaining percentage? 70, no? So that's why we are taking 70 here. Next, family pension received, rupees 30,000 per annum. Yes, we have certain rules and regulations and deduction or some limit with respect to family pension. We will see to that while solving the problem. Next, dividend received on preference shares, rupees 10,000 per annum. Yes, it is fully taxable. 10,000 rupees, it is fully taxable in the hands of assessee. Next, insurance commission received rupees 23,500. Expenses incurred in earning insurance commission is rupees 2,500. So deducting of 2,500 and the remaining 21,000 will be taxable. Next, Mr. Ajay received a gold chain from his friend as a gift. Its fair market value is 32,000, and painting from another friend as gift, its fair market value is rupees 18,000. So we will look into this particular point while we solving the problem. So these are all the points which they had given. So based on this information, we are supposed to solve this problem. So moving on to the solution part, we are supposed to make 2 columns, that is particulars, amount, and even we can put 3 columns also. While we are doing adjustments, it will be easy to solve the problem. Either 2 columns or 3 columns, anything is fine. So for this problem, 2 columns are enough. So first point in the problem, first point, director's fees rupees 10,000. Yes, director's fees rupees 10,000 is taxable. So we are taking the amount to the outer column, 10,000. Next, interest on POSB account. So what is the interest on POSB account received? The POSB account is rupees 500. The amount received or the interest received is 500. But what is the exemption limit for POSB interest? It is 3,500. So the exemption amount is more than the amount what we are receiving. So that is why here it is nil. Next, third point, dividend from cooperative society. Yes, any dividend received, it is taxable in the hands of the assessee. So dividend received from cooperative society, it is taxable. Next, winning from lottery, rupees 28,000. So they had given us only the net value 28,000. If you look into the problem, here you can see, that's fine. The fourth point, winning from Andhra Pradesh state lottery, rupees 28,000 net. We have to make it gross. So why we are supposed to make it gross? Because we are computing income from other sources in order to impose the tax, right? So if you are computing the value to impose the tax, if any tax is already deducted, you have to add back it. That's it. So 30% is deducted. We have to calculate the value for 100%. So how we are calculating the value? 28,000 into 100 by 70. So if you calculate this, you will get 40,000. So what is the actual winning amount? It is 40,000. After deducting 30% of tax, what is the amount received by the assessee? It is rupees 28,000. So here we calculated the 100% value, rupees 40,000. Next, dividend from preference shares. Yes, dividend from preference shares, it is not taxable. Then family pension received is rupees 30,000. Pension received is rupees 30,000. Next, 33.33% of pension, rupees 10,000 maximum limit. Yes, 33.33% of pension is rupees 10,000. That is, on this if you calculate, on 30,000 if you calculate 33.33%, you will get 10,000 rupees and maximum limit of rupees 15,000. So 33% of actual pension amount what we are receiving are 15,000. In this two, whichever is lower, that amount we are supposed to deduct from actual pension. So actual pension is 30,000. In 30,000, 33.33% are 15,000, whichever is lower, that is 10,000 is the lower value. So if you deduct 10,000 from 30,000, you will get the balance of 20,000. So that 20,000 is taxable. Next, insurance commission. Yes, insurance commission is rupees 23,500 and here you can see 24,737. Yes, we are supposed to calculate 95% of 100. So you will get 24,737 less expenses. If any expenses is incurred, we can less or we can deduct it. So what is the expenditure incurred? 2,500. So deduct the value, the balance whatever you will get, that is 22,237, that is taxable. Next, movable property is received as gift. Yes, it is tax free. If any movable property received as gift by a person, it is tax free. We need not to calculate tax or we need not to impose any tax on those movable assets. So if you calculate the outer column, the total amount column, if you total it, you will get 99,237. How much you will get? 99,237. So what is this income called? This income is called income from other sources. Income from other sources. Being gross total income. Yes, here we made few adjustments with respect to winning from lottery and all. So that's why we'll say being gross total income. So this is how we are supposed to solve the problem. Moving on to the next problem, that is problem number 4. From the following information are the following incomes of Mr. Lingaraj, resident, for the year ended 31st March 2022. Compute his income from other sources. Yes. Director's fees 10,000 taxable. Interest from bank deposits 3,000 taxable. Next, income from disclosed sources rupees 12,000. Income from undisclosed sources rupees 12,000. Next, winning from lotteries, that is net rupees 28,000 taxable. Royalty on book written 8,000. Income from lecture delivered 5,000. Interest on loan given to relatives 7,000. Next, interest on tax-free debentures of a company 3,600. Next, dividend from cooperative society 8,000. Next, interest on POSB account, that is post office savings bank account 500. Interest on central government securities 2,200. Next, he paid rupees 1,000 for typing of the manuscript of the book. This is with respect to the royalty on book written off. That is on the 5th point. We have adjustment in 12th point. So moving on to the solution, computation of income from other sources, particulars, amount. So director's fees, yes, taxable. Next, interest on bank deposits, yes, rupees 3,000, taxable. Next, income from undisclosed sources, yes, taxable. Next, winning from lotteries, net, we are supposed to make it as gross. So 28,000 into 100 divided by 70, how much you'll get? 40,000. Next, royalties on books, 8,000 minus typing charges of 1,000, you will get balance 7,000. Next, income from lecture delivered, rupees, yes, we have to look into that particular point. Income from lecture delivered, rupees 5,000. This income comes under income from salary, not under the head of income from other sources. So here we have written as nil. Next, interest on loan given to relatives, yes, rupees 7,000. Interest on tax-free debentures, net, that is, they had given net value, we are supposed to make it as gross. So they used to deduct 10% of tax on the interest amount received. So what is the interest amount here? So 3,600 into 100 divided by 90, how much you will get? Rupees 4,000. Next, dividend from cooperative society, what is the value? It is 8,000. Next, interest on post office savings bank account. So what is the value we have in the problem? Interest on POSB, it is 500, right? Then what is the limit we have, deduction limit we have? 3,500. So here in this problem, it's nil, because whatever the amount we are receiving, it is lesser than the deductible value. Next, interest on central government securities, 2,200. So total the value, if you total the value, you will get 93,200 rupees. So 93,200 is the actual value. So it is called taxable income from other sources. So moving on to the next problem, problem number 5. Compute the income from other sources of Mr. Chandra for the assessment year 2022-23 from the following details. Next, first point, income from agriculture land in India, 50,000. So if any agriculture income received in India, it is exempted. It is exempted in order to motivate the Indian farmers. Not to motivate the Indian farmers or to support the Indian farmers, what the government is doing, it is make it as tax free. Okay, need not to pay on agricultural income. Ground rent from land in Chamarajnagar, this is taxable. Next, director's fees, taxable. Dividend from cooperative society, taxable. Next, interest on POSB, taxable, but the whatever the value the assessee is receiving, it is lesser than the actual deductible value of 3,500. So taxable, but it is nil because the received amount is lesser than the deductible amount. Next, income from subletting of house, yes, taxable. Winning from horse race, taxable. Here is given net value, we are supposed to make it gross value. Next, royalty received, 5,000. Dividend from Indian company, yes, taxable. Interest on bank deposit, yes, taxable. So moving on to the solution part, computation of income from other sources, particulars, amount. So income from agriculture land in India, yes, it is exempted. Next, ground rent from land in Chamarajnagar, it is taxable. Next, director's fees received. So what is the value? 30,000. Next, dividend from cooperative society, what is the value? 5,000. Next, interest on POSB account, we are receiving 3,000, but the deductible value is 3,500, so it is nil. Next, income from subletting of house, yes, it is taxable. Next, winning from horse race, they are given net value, we are supposed to make it as gross. So what is the tax they deduct under winning from horse race? It is 30%. 30% is already deducted. What does it mean? That means they are paying only 70% to the winner. So 14,000 is the 70% value. So 14,000 divided by 70 into 100, you will get 20,000. Next, royalty received, yes, 5,000. Dividend from Indian company, rupees 10,000. Earlier, they used to give exemption for this, but now it is taxable in the hands of customers or the shareholders. So it is taxable. Next, interest on bank deposit rupees 10,000. So if you total the amount column, you will get rupees 1,20,000. This 1,20,000 is called what? Taxable income from other sources. So 1,20,000 is called what? Taxable income from other sources. I hope all of you are understanding the concept. So just you have to understand few adjustments what we have in this particular topic. So if you get to know about the adjustments, it is very much easier to solve the problem. So which are those exemptions or the adjustments are? The first thing is interest on POSB account. So yes, it is exempted up to 3,500. If you know this one, very easy to solve. Next one, with respect to casual incomes, like winning from horse race, winning from lottery, they will be giving you the net value, you have to make it as gross value. And interest on securities, they will be giving you the net value, you have to make it as gross value. So if you get to know about this information, and also agriculture income received in India, that is also exempted. If you know some exemptions as well as the adjustments, the deductions with respect to few kind of incomes, then it will be very easy to solve the problems. Next, moving on to the next problem, problem number 6. Compute the income from other sources from the following particulars for the assessment year. Point number 1. Dividend on equity shares, rupees 6,000, it is taxable. Next, income from letting a machinery, yes, it is also taxable. Next, interest on Vijaya Bank fixed deposit, obviously taxable. Dividend from United Trust of India, taxable. Agriculture income from London, rupees 10,000, taxable. Next, salary from Member of Parliament, 36,000. Daily allowances as MP, yes, this is exempted. Winning from horse race, gross they had given, need not to make it gross, already they had given gross value. Next, income from undisclosed sources, rupees 3,000. Ground rent, 1,000. So very easy to solve this problem. So particulars, amount, dividend on equity shares, 6,000. Income from letting on machinery, rupees 20,000. Interest on fixed deposit, yes, taxable, 5,000. Next, dividend from UTI, yes, taxable, 7,000. Agricultural income from London, 10,000. Salary from Member of Parliament, yes, it is taxable. Daily allowances of MP, yes, it is not taxable. Salary of MP is taxable, but daily allowances is exempted. It is not taxable. Next, winning from horse race, gross value is given, need not to worry. Directly we can take the amount, 10,000. Next, income from undisclosed sources, 3,000. Ground rent, rupees 1,000. So if you total the value, how much you will get? You will get 98,000. You will get 98,000. So taxable income from other sources. So moving on to the next problem, problem number 7. Mr. Rama furnishes the following particulars for the previous year. So point number 1, interest on bank deposit, taxable. Dividend from Indian company, yes, it is also taxable. Dividend from foreign company, yes, taxable. Examination remuneration, taxable. Income from lottery, yes, taxable. Agriculture income from Canada, yes, taxable. Next, winning from horse race, taxable. Interest on tax-free debentures, next one, taxable. Interest on tax-free debentures, yes, rupees 7,200. Royalty received, rupees 50,000. And related expenditure, rupees 5,000. We will see to it while we are solving the problem, the adjustments. Next, income from units of mutual funds. So these are all the informations what they are given in the problem. So by using this 10 points, you are supposed to compute the income from other sources. So moving on to the solution part, particulars, amount, interest on bank deposits, yes, taxable. Dividend from Indian company, rupees 20,000, taxable. Next, dividend from foreign company, taxable. Examination remuneration, 5,000. Income from lottery, they were only given the gross value, so 1 lakh. Next, agriculture income from Canada, 20,000. Next, winning from horse race, 28,000. Next, see, in winning from horse race, they are not mentioned that whether it's a gross value or net value. If nothing is mentioned, just assume that whatever the value is given is a gross value. Okay, if nothing is mentioned, assume that the given value is itself the gross value. Next one, interest on tax-free debentures, it is nil, exempted, need not to tax it. Next, royalty received 50,000, in that 5,000 additional expenditure relating to receiving of royalty. So deduct 5, remaining 45, taxable. Next, income from units of mutual funds. Income from units of mutual funds, it is taxable. Yes, if you total the amount column, you will get 3,03,000. If you total the amount column, you will get 3,03,000. So what is the 3,03,000 is called? 3,03,000 is called income from other sources or taxable income from other sources. So I hope all of you understood the topic, that is income from other sources. So what is the meaning of income from other sources? Bond washing transactions, and I also solved few problems based on income from other sources. So for more videos, keep watching. Until then, thank you all.